What's going on, everyone? So I alerted that I was getting into SPY, IWM, and NASDAQ calls yesterday because we closed above a very important trend line, right? What ended up happening today was we opened at a new all-time high on the SPY. So at the open, these calls were up 30-40% in the first few minutes of the day. So that worked out perfectly. Literally the first swing play of the new year worked out beautifully. But now I had to do it, and I went and alerted some NASDAQ puts. As much as I don't like being a bear, something ended up happening today that in the last 9 times that's happened on the NASDAQ, we've fallen at least one day afterward. So that's why I got the puts. I alerted the puts on Twitter as well. We die by the sword, we live by the sword, baby. So in today's video, I'm going to explain why I went and took those puts. I'm going to give you guys my reasoning, and we're going to go over the SPY, the NASDAQ, the IWM. The 30-year bond is also showing a lot more prevalence in the market right now. And then, of course, we're going to go over the crypto market. So without further ado, let's get started. All right, so here's the SPY. Obviously, I went short the NASDAQ, but, we saw weakness in the SPY, so that also gave me a reason to go short. So, number one, yesterday we went long because we closed above this trend line, and it was very, very bullish. It was a nice reversal from these lows. We wicked down a bit below, got a lot of the stop losses out of the way, and then we went higher. Now, today was an issue because yesterday we showed lots of strength because the market ended up going higher when the MACD was falling, okay? So that was bullish, and that was the reason why I got into the calls for swings. Right now, what's happening is that we ended up gapping up, making a new all-time high at the open, going up $1 more, and then falling, essentially flirting with this same trend line. So that is not a bullish signal, and I went and saw this as weakness. What should have happened was we should have cleanly closed above at least 478. That was not the case. We were showing lots of choppy movement. We showed lots of weakness intraday. And this MACD basically moving downwards and falling downwards while, gapping up and then showing this weak movement on the SPY, not good. So essentially, I went and I alerted puts for 2 weeks out on the NASDAQ. And yeah, essentially, you can also see that the RSI is stagnant. It's flat here. So what this means is when we had a red day, right? And essentially what this can potentially mean is we can collapse even lower. And a retest of the 23.6% fib is usually always on the table when we make a bull flag formation. So again, this is a downward move from here is literally very, very completely normal. It's very, very unlikely that when we have a huge move like this, don't even look at anything else. Just look at the fibs. When we have a huge move like this right here, since December 20th, right, we caught that bottom. A retest of this 23.6% fib is always on the table. That has not happened yet. And usually if this level gets cracked, it's very, very likely that we come back and retest this 38.2% fib. No matter how bullish the market looks right now, numbers and the way that this pattern and everything is set up, it's on our side. So, yeah, I hope you guys didn't put too much into the play because, we are very, very bullish overall. But, I mean, this is not a bullish setup, and I, wanted to go short for many different reasons. This is one of them. So this is the SPY. I essentially don't think that we hold up here, and I think that we fall a bit lower. I could be wrong. So there is my analysis on the SPY. Next, let's go ahead and take a look at the IWM. All right, here is the IWM. Clearly, we failed to close above this 226.61 level again. And yes, we did not fall as low as the NASDAQ did. I was saying that there was going to be inflow into the IWM this month, and that looks like that is the case. But because we showed a very, very bearish move on the NASDAQ and the SPY, the IWM also inevitably showed bearishness. So again, you can see that the MACD is falling. We gapped up on the IWM, but we failed to close above this extremely important resistance level. So this is now essentially showing us that there is more room to the downside. We failed to cross above with this positive, with this negative divergence, on the MACD, where, you know, the price is moving upwards, yet the MACD is falling. That's supposed to be very bullish. But with that extreme bullishness, we failed to cross and close above this resistance. So that means that we could potentially come back and retest these levels and then potentially even back down to 220. So again, you know, because we failed to cross above this resistance on the IWM, I also saw that as weakness in the overall market. So that was another reason why I went short the NASDAQ, because the SPY and the IWM were both showing weakness. So I don't want to make it too long. That's essentially really it on the IWM. Another thing is you could see the sensitivity on the RSI. It was a pretty big jump on the RSI, but again, there was no real follow through, breaking above any levels of resistance. So this can potentially mean that there's more room to the downside. Again, I could be completely wrong, but there's my analysis on the IWM. Now let's go ahead and take a look at the NASDAQ and the 30-year bond. All right, so the 30-year bond, we have not checked this guy out in a while. The last time we were looking at this was back in October when we were making these lows over here. And around this time is basically when the 30-year bond basically detached itself from the NASDAQ. And we were just waiting for major levels of support to break again to see if there's a prevalence. And currently, these last 2 days on the 30-year bond, we've crossed below this 158.22 level that I had drawn out from before. And it looks like we're crossing down below this 157 level. And we're making new lows. So we are back. The 30-year bond is relevant again. So as you can see, so essentially, if you guys are new here, the 30-year bond going down is an indication that investors are not as comfortable in longer-term plays for the stock market. So essentially, if the 30-year bond goes down, then the NASDAQ goes down as well. And if the 30-year bond is bullish, then that is a sign that the NASDAQ is bullish. Okay, so currently you can see clearly that the 30-year bond is vomiting to the downside, and the NASDAQ also was a bit bearish the past few days. So now that we're breaking down below these support levels, it's becoming very, very important to watch the 30-year bond. And usually what happens is the 30-year bond acts 1 day in advance. So essentially, if the 30-year bond becomes green tomorrow, right? The NASDAQ usually still goes down because it's 1 day behind. Does that make sense? So I hope that just made sense, right? But yeah, essentially, after a huge vomit to the downside, just looking at the technical indicators here on the 30-year bond, after a huge vomit past, you know, we're outside of the lower level of the B band. This is supposed to be this is supposed to be like on the indices. If this was to happen, this would be a good buying opportunity because we're very, very extended outside of the lower level of the B band. But because we're closing and, you know, we're breaking these prior important levels of support, it could be a bit worrisome. Another thing is that the RSI, look at this, we gap down lower, the RSI started sloping. So it's not even oversold yet on the RSI, which is very, very scary because if a huge vomit to the downside that basically made us fall outside of the lower standard deviation on the Bollinger Bands did not even get the RSI oversold, that means that there's still tons more room to the downside potentially. And this was another reason why I went short the NASDAQ. Yeah, man. So there's a lot of different reasons why I went short. So I really hope it works out because I want you guys to make money with me and stuff. So yeah, the 30-year bond, super, super bearish. Now let's go ahead and take a look at the NASDAQ so you guys can really understand why I went short. All right, here is a chart of the NDX. It's a 24-hour chart, basically, of the QQQ. And This basically played out 9 times since the March 2020 bottoms. So essentially what I was looking at, and every single time this has happened, is when the price of the NASDAQ gaps up and creates a red candle. All right, gaps up, creates a red candle while the MACD is falling. So those 3 conditions have to meet. If those 3 conditions meet, so we gapped up here, for example, right? Gapped up, cool. Create a red candle, cool. And we're falling on the MACD, cool. All 3 of those conditions met. The last 9 times this has happened since March 2020, the price of the NASDAQ ends up falling at least 1 day lower. So you can see that it happened here in April. You can see that it happened here in May. You can see that it happened here in July. We did fall lower, and we ended up, you know, if you went short at the close, you could have still made money over here. It happened over here. And it happened over here twice within a few days. We gapped up over here in January 2020 or 2021 at the end of the month, right? And you could have made money again. Similar, February 2021 could have made money over there. And then we're coming closer. So July 2021 again, it happened. And then most recently it happened in November. So right now, technically what ended up happening is we did gap up on the NASDAQ. We are falling on the MACD. And those 3 conditions were met, essentially. So, you know, that's why I essentially... It happened 9 times over the past year, or the past 2 years. So, yeah, man. So now, essentially, my reasoning to really go short was all of those reasons combined. The 30-year bonds were showing huge weakness, and we were breaking important levels of support. The SPY was showing weakness. The IWM was showing weakness at levels of resistance. And this pattern essentially happened once more, where, you know, we end up falling lower after it happens. So I'm assuming that the NASDAQ does fall lower tomorrow and our puts are profitable, because 9 out of 9 times since March 2020, it's played out pretty well. If it doesn't play out, then I mean, damn. Like, I mean, I don't know what else to say. I mean, it's just numbers. And we just, essentially, when you take trades, you need to have as many reasons for your trade as possible. If this doesn't work out and the market rips face and it goes higher tomorrow, I mean, dude, it is what it is. Like, I mean, I did my due diligence. The numbers are on our side. It just becomes a matter of statistics. If the market goes higher, I mean, damn, like, it just wasn't meant to be. And you can't really beat yourself up at that point. So yeah, essentially now we need to see if this is going to be, if this is going to be the 10th time that this happens. We gapped up. The MACD is falling lower. And yeah, essentially, this is really it for the NASDAQ. Let's go ahead and take a look at the QQQ. All right, here's the QQQ. You can clearly see that we gapped up. We failed at these 402, 403 levels of resistance here. The RSI, it fell down pretty well, which is a good sign. It means that there could potentially be another red day tomorrow and then a bounce. This weakness in the RSI right here is very bullish. But this pattern looks very, very disgusting. It just does not look like a bullish pattern to me. And also, the MACD is falling lower, but it barely crossed down below, but we had a very, very red day. So once again, yesterday's bullishness was basically nullified today, because yesterday we were very, very bullish because, look, I was saying that the MACD is falling, yet we had a green day. So that is very, very bullish. But today we made a huge red candle, basically engulfing all of these prior days. And we failed to hold this very important support level at 396.78. We ended up closing below it into the close. So that is not a good sign. Overall, I really do think that the NASDAQ does come back and retest this 393 level at least. Even if it comes back and retests 394 level, regardless, the puts would be profitable. But again, this is not a bullish setup. This is not how we want to see. We saw a huge strength yesterday. That's why the calls worked out really well into the open. But then that huge sell-off during the day basically it's not a good sign. So essentially, all things are really pointing to a downward move in the NASDAQ. If for some odd reason, again, we bounce, it is what it is. And yeah, man, I mean, it is what it is. You try to find as many reasons as possible to take the trade. If it doesn't work out, then I mean, you leave it in God's hands at that point. But yeah, so there's my analysis on the NASDAQ. There's my analysis on the overall stock market. I hope it helped. And now we're definitely going to go ahead and take a look at what the hell is going on in the crypto market. All right, so currently Bitcoin is holding this 45,500 level very, very well. You can see it's basically, really just trending aligned this downtrend line. And essentially, we need to just see if this level holds, right? But overall, you can see that the MACD right here, you can see that the MACD was curling upwards, right? But the price was falling down. Right now, it's a good signal right here that this blue MACD line is pointing downwards now, which means that the MACD is not showing upwards momentum, and it's starting to now follow the weakness in Bitcoin. So that is a very, very good sign. The RSI also falling and continuing to fall, right? It's still a good sign. Obviously, it's not a good sign that it's sloping like this, because it still means that there's still like a potential vomit potential on the RSI to the downside. But once more, it's good that both indices are showing weakness, and it's showing, weakness compared to the weakness that's being shown in the stock price itself for Bitcoin. So essentially now, technically from a trader's perspective, you can go along with a stop loss a bit below 45,500, and then if it skyrockets to new all-time highs, you're good to go. But technically, it still shows that there's potential weakness to the downside in both the RSI and the MACD, as well as this pattern. This is a bear flag pattern, and it doesn't look like it wants to hold. But of course, again, hedge funds and banks are now involved in this market. So when things do look obviously bearish, it's a good indication that people could start to load up and buy billions of dollars worth of Bitcoin to start making the price go bullish. So, but yeah, my thesis overall, regardless, is that I do think that we're going to touch this 44 and 45,000 level in the near term. And from there, that's when things are going to be interesting. From there, that's when we have to see how the indicators look. We need to see then if the RSI essentially, collapses a bit more, and if the MACD essentially collapses a bit more, that'll be much more bullish. But right now, you can technically go long against 45,500 and just hope for the best and hope for, a retest back here at 47,800. Overall, I don't think that happens, but again, I could be completely wrong. There's Bitcoin, right? And now we should definitely take a look at Ethereum. So Ethereum, you can see that the MACD already crossed over. So all of this potential upwards momentum right here. So down when Ethereum was trading at 36.29, we worked off of this huge oversold condition, which is supposed to be like a lot of ammo to the upside, right? We worked off of this oversold condition by only moving up about $170, which is not a good sign. We already crossed above and we're now technically overbought. So that is not a bullish signal here. You can see that we tested the 20 exponential moving average, and now that is going to be a very important level of resistance today. The 3,900, 3,950 level is going to be very interesting and important as resistance. And, again, we're trading around this downtrend line. Yesterday, we bounced exactly off of it. The day before, we bounced exactly off of it. And now it looks like we're currently holding above the 3,750. But again, we worked off of this oversold condition very, very poorly. But yeah, overall, if Ethereum can basically cross above 39.50 and hold, it can help bring Bitcoin and the rest of the market up. So keep your eyes on Ethereum. Technically, it looks more bullish than Bitcoin. So keep your eyes on this. It might help Bitcoin out of its the slumber that it's currently in. But yeah, man, there's my analysis on the overall stock market. There's my analysis on Bitcoin, Ethereum. If you guys enjoyed the video, please make sure to follow, like, subscribe, put on post notifications, follow me on Twitter. And yeah, man, I love you guys. I really, really hope I'm helping you. And again, this is going to be the best year of our lives to date. So yeah, man, this is day 2 of our trading journey for 2022. And I will see you guys next time. Thank you.